Hello, traders. It's 8:02 a.m. Chicago time. It is Thursday, the 8th of October, 2020. Thanks for joining me today on episode number 1854. The market's still in rally mode. We've taken back the area where the news came in from a couple days ago, the 3420 in the S&Ps. Currently, the S&P is trading at 34.28. My quote board for the futures is completely blue this morning. Everything is higher, led by crude. Crude is over the $40 mark in a November contract, trading at 40.66, up 71 cents. And the Russell's again leading with trading at 1625, up 16 points or 1%. The Nasdaq's up 100.5 points. There's a lot going on with the majors in the Nasdaq with this antitrust and potential breakup talk. So there's a lot of news and noise in those stocks right now. The DAX is up 115 points or 0.9%. The Euro stock's up 22 points or 0.68. The Dow is up 186. Gold is up over the $1,900 mark, up $11.80. The laggard today is the Euro. And the dollar is down to $93.67.5 on the index. On the index, I'm seeing money flowing into the 30-year bond as well as a 10-year note as well. So it's just green all across. Money moving from cash to the markets on many levels. So that's where we stand this morning. That's the asset allocation. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning we did have balanced trade out of Germany, which came in lower than forecast. Came in at 12.8 billion euros versus 17.4 expected. We did have a bunch of ECB speakers. The central bank parade continues. Initial claims this morning in line at 840,000, and the 4-week average jobless claims is at 857,000, slightly higher, which is worse. Continuing claims slightly better at 10.976 million versus 11.5 expected. We do get natural gas today, but really for the rest of the day, it is about the Fed speakers. There are a few auctions, a four-week bill, 8-week bill auction, as well as a 30-year bond auction. That's at noon Central, 1 Eastern. We get Fed's Barkin at 2:30 and Fed's Kaplan at 6. And then this evening at 9:45, we get the Caixin Services PMI out of China, expecting 53 for those who are trading during that period. So that's where we stand. It's a wonderful mishmash today. We did get the vice presidential debate. We're less than 4 weeks. We're about 4 weeks to elections here in the U.S. Expecting volatility to remain high and expecting the market to remain a little bit bipolar. And so that just be aware that there's this big event that's looming a month away, and a lot can happen. It's a tough market to swing in. So that's where we stand. Looking at what was expected yesterday, the primary scenario yesterday was looking for a push into 33.90. I expected a hold in range, and I expected it to retest the 33.60 and then 33.40 below to create a stable base. This is the normal expectation after a huge impulse or a big impulse down. Normally we would check to see if the foundation is still intact, and then we would likely start to turn up on the close, and that's what I was looking for here. a visit down into the 60 and a push up. The secondary is what ended up working out, except that the market had a bit of a drive at the open. The secondary was looking for a dip and a push to 13, the stock zone, the 24.13 right there. If this seems really small to you, you should push this button right here to maximize it on your screen, and you should push this button right here to set it to 1080p so you can get the highest definition for clarity if you're having a hard time reading the numbers on the screen. So the secondary scenario is looking for a rally to 13 and then a rotation down into the close towards 3,400. Here's what actually happened. We immediately push off the low. So we have once again, we have an open that is also the low, essentially by a tick, also the low and the IB low. We immediately push off the low. You can see the delta is positive right away. And then it kind of petered out. The primary goal here, given the opening type, is a push into the prior day's point of control at 96. And it just traded sideways. There were some crosswinds here in the morning trade, and then we eventually pushed into the point of control. We expected chop in here, and we got chop. Finally gives it up on the downside to 85, and then breaks the 3,400. It pushed to 34.1675. 13 is what was expected to be tested today. 1675, and then lower high, and it came back towards the 3,400. It did hold this this stock zone. This is a high volume node area from way back, 34.0375, 34.04, and we're holding steady. This is a double distribution day. We've been having a lot of double distributions. Basically, the market trades in one zone, breaks directionally, and then consolidates and finds a new balance area. Overall, yesterday was in balance with the day before. In the upper distribution, we basically accept value where it was the day before, despite the sell-off, and we're holding steady, and so we're looking for it to continue higher. It did not make an attempt to take out this low volume node. It opened right on top of the low volume node, and remember, the expectation yesterday is a test up and a break lower to hold this low volume node, this dividing point in between the upper distribution and the lower distribution from the selling day. So what this market did, it held right on top of the low volume node, which is right there. That was our opening price, and it just stayed in the upper distribution, giving us a clue that it's that the sellers are just not getting the job done, and that they're holding steady. They're holding the upper range quite steady. Now, to zoom out a little bit and get a look at the big picture, here's what we have. We have the all-time high at 35.7675. We have a big selling run, an extension pullback, 34.14. If you remember the double top here, 34.1375, 34.14, and then continuation, and then we're looking for a correction, looking for a higher low at the 19. Remember 14, 1950. Remember the news from Trump the other day was at 34.2050, 34.19, a key area up here, and we were looking for it to run higher. And then what it did is it gapped down. It tried to fill the gap, left the gap open, and then from there it sold off into the 32 handle, got to 31.98. But as we made this bottom, we started to see that the delta was turning positive. I talked about this a week and a half ago or so. The delta was turning positive, and now The 3312 becomes a big area. We took out the 3312 last week on Monday with a gap up, and we have not looked back since. It has held. It is held into this 3400, 3340 to 3360 area, and then this week we put in a higher low. Remember, I said earlier this week that the low of last week, 3311.50, becomes a really important area to watch because the one-time framing on the weekly is up, is up. Okay, and so we're unless it takes out this 3311.50 on the weekly, we do have the market basically one-time framing higher, and so despite the sell-off from Tuesday, we still recovered pretty well, and we're about to continue to break higher and take out this 19 once again. We did reach 2175, and we're at 29 with the 61.8% of this entire swing down being at 32. The overnight high is 33. So a little bit of a struggle here. Likely the next big area to test is 94, 34. 94, and you can see that there's quite a thin zone here, quite a thin zone in the composite. This is likely to grind its way up quite slowly to that 34.94. That's what's expected in the long run, and the rally from the bottom has pretty good delta in it. You can see the delta rising every day, making higher lows. I'm not so interested in higher highs again. I know price action based traders need to see a higher low and a higher high to define a trend, but frankly, as long as it doesn't take out the low, that is a show of strength. Okay, it doesn't have to take out the high. It just needs to hold the low to continue that that trend. So remember, the big picture is we're still in this uptrending channel here in recovery, and we are attacking this important area. That is what the strategic view of the price map is. I don't know, technical analysis can be done in many, many different ways, and many people think it's a hoax or whatever, but you gotta give credit to the fact that these guys sold off pretty good the other day, and they simply brought it back to 33.40, right? So the low of Tuesday missed 33, from 34.20, missed 33.40 by just a couple of points. Couple points, that's it. Okay, and so we gap up and we're holding steady. This is quite bullish. We could see that it was quite bullish yesterday. It just wasn't giving much in the down rotations. This is how things looked yesterday from the low overnight to right before the open. I set up this trend line to gauge how the market is responding to the upside, and you can see that the trend line has been pretty steady, tested overnight for the push to the high, and it finally breaks through and then tests from below right there on the news from Trump about the COVID stimulus back on deck. It's a reality show. You gotta get things moving by putting twists and turns in the plot. So that's how the market responded. But we're now holding in this kind of a triangle pattern. We're waiting for it to resolve, but it looks to me like it is likely to grind up. The volume overnight was pretty decent, 246,000. We've got pretty good range, 34.05 to 34.33. All in all, it's telling me that it's likely to be a pretty active session. The overnight inventory is almost 100% long. The delta is positive. Overall, it might correct a little bit, but I'm looking for it to continue higher. We are up against that 61.8% of the entire downswing on the day session. So we're expecting some sort of response up here, but overall, the market's not giving any signs that it's weakening. Okay, so that's the big picture view. Um, let's move into what's expected for today. So, what are we looking for today? The primary scenario for today is, and we have about 13 minutes, 12 minutes to the open. 1 second. The primary scenario, we're pressed up against the overnight high. I'm looking for this to bounce a little bit, looking for a pullback to around the 34.19.20 area consolidation here, and looking for an impulse higher to push the overnight high at 33. Looking for it to um, bounce around in this area and then push to 42. 42 has quite a bit going on here, a little bit of confluence, a thicker stock zone. I'm looking for it to sit steady in this area before it turns over and holds. The overall range for the session is expected to be around 25 points from about 20 to about 45 with an upward skew. I expect this to be an orderly grind up, a continuation of basically yesterday's action. Secondary, immediately push higher, get to 34, 33, push to 35, almost to 42, impulse down, come back below the open, hold steady in the overnight session range, the overnight value, and then push back into the 20, consolidate, and dip into yesterday's upper distribution and give us a higher high, a higher point of control, but hold steady up here. I'm looking for something that looks like a large distribution with a point of control at the low and a low distribution at the high on the secondary scenario. This has gone quite a bit, quite far so far, and has broken up above the 34.19. But I expect that as it continues higher, there's likely to be less steam available for the buyers to continue to push. Now, the puzzle here is the trick here is, how do I turn this into an actionable setup? Like, we could sit here and prognosticate about the market and the theory and all this, but we're not dealing in theory here. We're dealing in fact. We're looking for, how do we take advantage of this? The way to take advantage of this, in my opinion, is to just be aware of the key areas in play. You have some confluence here, this big zone, and in the 20, which comes from the SOC, which comes from way back here, if you recall, that high before the sell-off to 31.98. So you have this big area, and you would expect it on a test to hold. Okay, how it treats the 1920 tells us what it's likely to do next. If it pokes through and starts to rotate back up in an impulse, then we're just looking long, and then we are really gauging, given the day range stats, we're gauging for a test of 42 to 45. So these are the two main areas. If it's not able to hold the 1920, then we're looking at the 34.03, 03, 04. So knowing that these battle zones means that we don't have to sit here and fret about catching the turn or catching the tick, catching a specific price. We know we have room, that the market is likely to move a bit of distance once it breaks, right? So You don't have to sit here and go, it just failed through 1920 from the top and I didn't catch the drop. Well, guess what? There's likely to be at least 3, 4 opportunities on a pullback to catch a pullback below 19 for a run into '05, then '03, '04, '05 being the low volume node from yesterday. So don't get so caught up in the FOMO that you forget what the big map is showing. And those are the big numbers. These are the big numbers to pay attention to in this area, and they cover a wide enough range. Unless there's news, they cover a wide enough range. So you as a trader are coming in more relaxed, knowing, hey, I just need to see how they treat this 1920 area on the open, if not 42.45 above, if not '03, '04. It kind of makes things a lot calmer and helps you be patient. This is how big traders trade. Good luck today, and I'll catch you tomorrow morning. Take care.